Today we dive into what some have called the trade of the century to see how exactly Bill Ackman made $2.6 billion in a matter of 28 days. But there's a major twist to this story that many have not even discussed or perhaps realized, because although Bill Ackman played a very dangerous game with public sentiment and made $2.6 billion in the process, he could have actually made much more than that if his plan had worked out fully, which explains why he was so hell-bent on creating utter chaos in the market.
Until a vaccine is manufactured, distributed, and injected, we will go through a depression-era period.
Ackman is one of the most savage investors who continuously games the system and is a master in manipulating public opinion. He has done this over and over again throughout his career, with some major moves like, for instance, the Canadian railway deal, where he led a shareholder uprising and pretty much bulldozed the CEO out of the company. And funny enough, here he also made a $2.6 billion profit. So let me know in the comment section what you think of Bill Ackman's tactics. Now let's dive right in. The $27 million bet. So in March of 2020, Bill Ackman went on the CNBC stage with one of the most dramatic corporate interviews in history, where he even attacked the holdings of his own investors.
Take a look at Hilton stock. We're a major shareholder of Hilton. Hilton is the canary in the coal mine. This is an incredibly well-capitalized, amazing, dominant global company. Okay, it's going to zero, okay, along with every other hotel company.
According to Forbes, the shares of Hilton fell by around 20% as he was speaking, and the entire market was closed down during the interview after a circuit breaker was triggered. Now obviously, Ackman can be credited for the entire drop in the markets, but he's also not stupid. Ackman knew exactly what he was doing. He is in fact a brilliant, albeit very reckless investor who analyzed the market and came to the conclusion that the risk on corporate bonds was not correctly priced and that the market was not properly accounting for the possibility of a countrywide shutdown. Now this error in pricing is exactly why he wanted a 30-day shutdown so badly, and why he kept referencing this over and over again in his CNBC interview while warning of a complete bankruptcy in multiple industries.
What will happen is, the hotel industry and the restaurant industry will go bankrupt first. Boeing is, on the brink. Okay, Boeing will not survive without a government bailout. Okay, so look at airline industry, auto industry, restaurant industry, hotel industry.
So smart as he is, Ackman decided to hedge against the market and buy credit default swaps on corporate debt indexes. And here's where things start to get interesting, because Ackman chooses his words very carefully when he said, "We bought enough insurance to protect the $8.5 billion we had invested in the stock market." This does not mean he had bought $8.5 billion worth of insurance, it just means he had enough to cover those possible losses. Because according to the Financial Times, he had actually bought well over $50 billion in US investment grade debt and another $18.5 billion in the European equivalent index. So in total, Ackman had secured more than $68.5 billion in insurance to cover just $8.5 billion worth of stocks, and this is where you start to see the genius of the game that he's playing. Ackman is now sitting on a potential payout of $68.5 billion worth of insurance, for which he only paid $27 million in premiums, and in order for him to get paid, he needs credit events to happen and the financial markets to run scared and start buying insurance. So in the beginning of March, this is exactly what happened, and the value of his credit default swap skyrockets because the price tag of insurance quadruples. Now it's important to note here that these CDS deals typically last around 5 years and you pay a monthly premium just like with a normal insurance policy. However, in the case of Ackman, this insurance policy had a $40 million per month price tag, according to the Financial Times, so clearly Ackman wanted to get out as quickly as possible, or he was going to pay hundreds of millions of dollars in premiums. This is why he kept hammering on that the president should shut down everything for just 30 days, or the whole system of capitalism would break down if any other solution would be used.
Capitalism does not work in an 18-month shutdown. Capitalism can work in a 30-day shutdown.
Ackman even went as far as bringing in the National Guard to force people into their homes, which is obviously another scare tactic to frighten markets.
And we got to do the 30-day shutdown. And if the president has to bring out the National Guard to keep people in their homes, which I don't think he will need to do, he should do it.
Now you might wonder, why do the interview if the S&P 500 has already fallen so much by March 12th, and the value of the CDS is already at $2.6 billion? Well, according to Ackman's own words, he had already sold around half of his position by March 18th, which was worth about $1.3 billion at the time. So he first secured a huge profit by selling off half of his position, and then goes on air on the 18th to scare the living shit out of the CNBC viewers, even hinting at a bank run.
I went to the bank and I took out a large amount of money in cash.
It's clear at this point that Ackman wants a quick intervention from the president because a gradual prolonged shutting down of parts of the economy is causing major fluctuations in his credit default swaps. On March the 13th, for instance, the S&P 500 rose almost 10%, which gave investors a lot of confidence and seriously decreased the price of credit default swaps. According to the Financial Times, the total value of Ackman's CDS dropped by around $800 million in a single day. And this insane volatility is why he wanted to avoid a prolonged 18-month plan and preferred a quick, aggressive solution.
But what's scaring the American people and corporate America is the gradual rollout, okay, of what's going on. We need to shut it down now.
And just in case his message wasn't clear enough, Ackman summarizes his views in one final doomsday statement.
America will end as we know it, okay, I'm sorry to say so, okay, unless we take this option.
Before we continue, please like and subscribe to the channel for more videos. So all this maneuvering is pure hedge fund brilliance and shows the superb skill of Bill Ackman in investment banking. Because at this point, no matter what happens, he wins. Ackman has already made $1.3 billion in profit. He still holds around 50% of a $68.5 billion insurance package and has just scared the financial markets and the general public, which could result in a much bigger valuation for the credit default swaps that he's still holding. Now, Ackman claimed that the value of the insurance policies did not change at all after his appearance on CNBC. However, if you look at the stock market, you will see a clear decline after March 18th, which is around 13%. So if a 10% spike loses you $800 million, it's fair to assume that a 30% dip increases the value of the insurance policy, since the whole purpose for buying the credit default swap was to protect against a decrease in the stock market. And let's not forget that during the interview, a circuit breaker was triggered, shutting down the market, which is a clear sign of panic in the system and serious changes in valuation. In the end, he ends up selling the remaining 50% for around the same price as the first 50%, resulting in a total gain of around $2.6 billion. However, just because you end up selling for a certain price does not mean that price didn't fluctuate in between. So all in all, Ackman only made $2.6 billion from the credit default swaps, which could have been a lot more based on the total amount that he had insured. He then reinvested $1 billion into the same stocks that he claimed were going bankrupt if his 30-day plan was not immediately implemented. The Hilton stock that he was so sure would go to zero and was trading at around $69 when he was exiting the CDS position and buying up Hilton stocks like crazy, is now trading at well over $120. So it's unclear how much Bill Ackman actually made from the whole CDS game that he was playing in March of 2020, but it's definitely much more than just the $2.6 billion from selling the CDS. This was the Ackman game. Please like and subscribe to the channel for more videos.